Good afternoon, everybody. Welcome to the midday update. I'm Laz. The market, continues to make its stand. Seeing some weakness this morning. We came in selling right away, right off the bat. Continued yesterday's gap down. So some follow through to yesterday's big down move in the markets. Stabilizing around 11. S&Ps have actually rallied back. It's now around 1 o'clock. The market is roughly flat on the day. The S&Ps are basically flat. So we're seeing, a little bit of a bounce here. The last trading day of the month of May. It has not been a pretty month. We're going to take a look at that in a second. From the S&P standpoint, still seeing some leadership from Apple, holding its ground, trading around the 580 mark. Again, early morning selling, finding a short-term bottom around 1030, 1045, and rallying back now close to the higher end of the intraday range. It's still a very, very choppy trade. I think the choppiness is either something you're going to embrace or it's going to chew you up. And I think going into each and every day into the summer, you got to expect lower volume to sort of taper into the market. Lower volume always creates, little more volatility. Stocks can go up or down, but not as much liquidity as we've seen in months past. So it definitely makes trading a little bit tougher. You have to pick and choose your spots wisely. Anybody that's ever participated or gone through the active trader program here at T3 Live knows that you have to pick and choose your spots and be strategic in what you do. Spent a long time this morning talking about time frame alignment and going after stocks that have, that are aligned from the hourly all the way down to the 5-minute charts. Those are the trades that are working and paying us, in spades. Let's take a look here. Let's go over to my charts. So here's an hourly of the S&P, and I'll make it a little bit bigger. This was this gap down yesterday. We basically traded all day sideways, again, letting the averages catch up to the gap down. And immediately this morning, pushing us lower, now snapping back here into this lunchtime hour. A flat 21 here tells me that we could stay range bound for a little bit of time, but I still think the underlying bias is to the downside. Let's take a look at the daily. Again, just more volatility. We saw that rally up on Tuesday, and now we were back as low as the prior lows here as Thursday. So very, very quick movement. A lot of this coming overnight and things changing almost on an hourly basis right now. So you have to tread lightly, put on less risk, let this market settle in. At some point there'll be, I think, a better trendable situation. Right now it is a lot of ebbs and flows. So you have to like I said, be careful in these waters. Apple, another sort of staple stock. This is something another active trader, setup here is what we call the catch play, a rising 8. Stock catches into a rising average. Seeing higher prices today, going back, filling this gap, which is ever so slight here on this chart, back here from where we actually broke, we gapped down in early May. That's what started this ultimate waterfall trade to the low, that 530 mark, our short-term low. So snapping back, filling this open gap, trading down today. This is intraday and early. Again, just a sort of a reflection of the market. Early morning sell-off, followed by a very slow, methodical retracement, which is happening currently. You can see right now we're back to the higher end of the range. So Apple continues to hold, and I think buyers have been rewarded there the last couple of days, especially yesterday afternoon on the VTF. A lot of good, real good, breakout setup in Apple through 573 for those that were on the VTF. As far as what else is going on out there, let's look at some daily charts. Amazon working its way lower, but not necessarily following through again into this gap today. Taking out yesterday's lows and snapping back. I suspect you could see a little bounce back here into the 214 to 215 area before this one becomes possibly a short again. So some trades we're watching here, and again, the weeks still remain weak. Facebook, what do we say that we haven't already said? Facebook continuing to make new lows, even as the market here, let's look at an intraday, even as the market, rallies here through the lunchtime hour, the stock just sitting on its lows of the day. There are just no buyers here. So this is a stock we're going to look at for follow through into this afternoon unless something changes. A trade right now through like the 2675, 2680 mark probably would warrant lower prices into this afternoon, possibly again into tomorrow morning. But right now, holding that level firmly. So a couple different trades we're looking at. Lulu, another one that we were watching this morning. Early morning weakness, you know, just like the rest of the market, finding a bounce. So some stocks, again, it is a little bit of a tug of war here, and I think you have to respect that. I think it's going to stay a tug of war even into tomorrow, the first day of the new month, but a Friday nevertheless. Again, pick and choose your spots wisely. This is a strategy-driven, tactical trading environment. You have to know where you want to be, stay with stocks that have good alignment, like I said earlier, and really, really have a plan and execute your plan. If you can do that effectively, you're going to wind up trading this environment, you know, I think hopefully with a good level of success. As always, a planned trader is a profitable trader, and I'll talk to you on the VTF. Take care.
Hi, I'm Sean Hendelman, CEO of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.